Hi guys, I'm Working Dad Trader, and this week is my birthday week, and as a birthday present to you, I'm gonna give you an insight into where my money's invested and why it's going to make me a lot richer by 2030. All I ask for you, as it's my birthday, is you hit that like button, and if you haven't subscribed already, then subscribe. Okay, let's get on with it. Okay, so the areas I'm invested in, I'm already invested in an ETF and I'm already invested in a fund. And the section that I'm invested in is India, the fantastic country of India, and I'm going to explain why that in 2030 India is going to be massive and it's going to make me very rich. So let's get on with it. India has an absolutely massive population. It has a population of 1,397,000,000 people. Massive, massive population. If we go into some more macro facts, that 50% of the population of India as it stands are under 25. That is a really young population of people that are going to grow up and need all sorts of things and are going to be really tech savvy and going to be the future of India. If we look at the middle class of India is expected to grow by 2030. That 79% of their population is going to be middle class from down around the 20% mark. It's going to be massive, massive growth in the middle class. 88% of the next billion people to enter into the middle class category from around the world, 88% are going to come from Asia. So it's, bear these macro facts in mind that we're looking at 2030, which is not long away. And 88% of the growth of the middle class people are going to explode in Asia. That's what 88% of it's going to be. They're saying 380 million people will come from India. It could be a lot higher than that. And it's just, when you look at India has a really young population, over half the population is under 25. These people are going to have lots of money to spend, and we can all remember when we were in our 20s, we wanted to spend, have a good time, go out, go on holidays, entertain. This is really going to explode in the next less than 10 years. This is why some of the factors I'm invested in India. We also need to look at the middle class is expected to spend £29 trillion more a year time we get to 2030. That's obviously a world figure, but £29 trillion more by 2030. And a lot of that money is going to come from the middle class of Asia and the middle class of India. Obviously, China's is growing also, but India's is massive and it's got such a young population. And like I say, by 2030, it's predicted that their middle class will be nearly 80% of their population. Other macro factors we can look at is the Indian economy is expected to grow around 11%. It varies slightly depending on where you read, but they're saying around 11% in 2021, which is even higher than China is expected to grow. So that is, again, fantastic. Okay, so the first one is an ETF that's already in my trading 212 portfolio, which you might have seen if you've seen some of my previous 212 updates on how my 212 account's doing every month. Then you may well have already seen that I've invested in the iShares India ETF, ticker symbol NDIA on that one. It's only been going since 2018, about 3 years. I've been invested in this one for a while, and I'm already had some great returns on that, because the Indian market has just been tearing away. The 1 year return on the iShares ETF is 51%. Since it's been going over the last 3 years, it's got a return of 16.5%, which, when you take into account, that's also had obviously the pandemic in the middle of that. And India was a country that did suffer really badly as well. They've had some pretty bad waves of the virus. So they've been through some rough times. So for the last 3 years, it's returned to 16.5%, which is pretty good. but it's more of the future that I think that you need to look into, and how the populations grow and how that's going to add to it. And also, you can see a list of the top holdings that the iShares ETF holds, and where it invests its money. It's got a reasonably cheap cost of, it costs 0.65% to invest in this ETF with the iShares. So it's a reasonable one to get into the Indian market. Again, I've talked before, I see the Indian market as being massive, but I didn't want to go massively into trying to buy individual stocks. So my opinion was to invest in some type of ETF or a fund that will cover the Indian whole as a section, as a whole country, and spread my money evenly. I'm not even going to try and say that I'm well up on Indian stocks, individual stocks, like I am with, say, the US or the UK market. But I see massive potential in, obviously, that section. So that's why an ETF to me is far easier, or a fund, etc. So the next fund that I've invested in, which this is in my own personal ISA, which is with Hargreaves Lansdown, and I invest into this obviously a lot. I pay into it monthly, and that is the Stewart Innovative Indian Subcontinent Sustainability Fund. It's quite hard to say, but obviously it's on the screen. Like I say, that's with Hargreaves Lansdown, but you could probably get it through other platforms and providers as well. On this fund, it's got a great feedback. I mean, you can go onto the Hargreaves Lansdown site anyway and just research funds, etc. for free. They give this information for free, so you can just go onto their site and click in the search button and type it in, and it brings up all sorts of details about different funds. So by all means, go ahead and bring that up on Hargreaves Lansdown. It gives you a lot of detail. It's in one of their favourite funds. They give it a star as one of their favourite funds that they recommend for investing in. I did my own research into it as well, and I really like the fund. The people that run the fund got a good background in this area, obviously way more than I've got. Obviously, the 1 year return is 46%. So the last year, it's returned 46%, which has been great. It's been great for my personal ISA as well. Obviously, there's a list of the holdings that it holds. That's, I think it's the top 10 holdings. The main one there being Tube Investments of India Limited. Again, I'm not up to speed with all the different ones in India, but basically from research I've done, that they're an engineering company, massive engineering limited company. They do make a lot of cycles and metals for they make mopeds, cycles. They make lots of steel tubes and automotive chains that go into vehicles, etc. So they're quite a big company within India, and obviously in India there's a lot of people that ride mopeds and cycles and stuff, and that's a really big market for them. And you look at the sectors list, they're really big and invested in IT, and again, with the young population, I can see that being beneficial as everything is moving into tech and IT. So it makes sense to invest into these companies. There's a lot of new tech and IT companies coming out of India, and it's growing at a fast pace. So yeah, that's why I'm invested in India. The charge is obviously a bit higher on this one. It's at 1.11%, so it is high for some funds, especially if you're going to compare it to things like a lot of the cheap funds out there. Then yeah, it's going to be a lot higher than those. And finally, I wanted to have a look just at the overall picture of the charts, because it's always handy to look at the chart. On the graphs, this is the Nifty 50, which is the stock market in India, the 50 best companies. If we look at the chart now, as you can see from 2021, the Indian market has been on a massive tear upwards. It's been on a massive upward trend. So it's been going great. unlike other charts, like say the China market, which has been going down, India's been doing fantastic. And then obviously we look at more recent and in a daily chart candles. You can see that it's been getting away, which is the green line. That's the 25 moving average. It's been getting away too much from the green 25 moving average line, and it's at the minute it's on a big pullback, and I expect it to pull back and hit the 25 moving average like it's done in the past. So if it's something that you're interested in investing into the Indian market, or another fund that invests in emerging markets, which is heavily into India, there's a lots of different ones out there, it might be a pretty good time to invest in this area, because it's at the minute it's having a pullback. The Indian market's been slightly down of late. Like I say, it's having a small pullback, a bit like what's happened with the S&P 500 in the US, etc. It's having a small pullback. I think it will hit the 25 moving average green line, and then it will take off again. So it's more than expected that's going to happen. So if it's something that you're interested in, then it could be a really great time to invest now while it's having a slight pullback to get some good value. Okay, so I hope you really enjoyed that. Like I say, I see India as being huge. You look at the macro, like I said at the start, of why India is going to be massive. The stats and it speaks for itself. It is going to be massive. It's going to be a country that's going to have a lot of money to spend, a lot of people with money to spend, young population with wanting to do things, wanting to spend money. So I'm really happy with investing in this section. India doesn't really get talked about, especially in the West, that much, and I really think that's a mistake. I think people should really look hard into a lot more of these countries, and especially India. It is going to explode. It's really on the coattails of China as far as where it's going, and the amount of investment that India is getting, and from outside as well, from other countries. So take a look. Like I say, I'm already invested, and I'm really pleased I am. I think it's going to be massive. And let me know what you think in the comment section. Tell me where your money's invested, and tell me what you think of India and Asia, etc. And I hope to see you soon. Okay, take care. Bye.